Now, while the UK is struggling to get inflation under control, China's economy is suffering from the opposite, deflation. Consumer prices declined in July for the first time in more than 2 years. People and businesses are not spending, and the world's second largest economy is struggling to revive demand.
Citigroup now offering to pay some staffers a portion of their bonuses early if they agree to leave the company. Citi has already cut more than 300 senior management roles and hasn't put a number out on how many more cuts are still to come. But
firing 9 senior executives, GM's Cruise is continuing its restructuring of the struggling autonomous car industry by laying off 24% of its workforce. The president sent a note to staff on Thursday informing them of the layoffs. The job cuts total around 900 positions.
Even compared to last year when we first started seeing a wave of tech layoffs, 2023 is the highest number that we've seen to date. So 250,000 tech employees have been laid off so far this year. That's up from 165,000 in 2022. And even in 2020, when we saw a wave of pandemic-related tech layoffs, that number was only about 80,000. So this year has been the worst time in the past few years.
Why am I showing you all these news clips? Now you might be confused. Companies in the US and UK are firing. The economic condition of the world is not very good. China has a lot of debt and they are facing real estate problems. Their economy is collapsing. The inflation rate is at all-time high and the number of new job openings are going down and down. Yet people are saying that India is going to grow at a rapid pace. Global exports of India are at all-time high. And the most important, which has happened recently, the Indian stock market are creating new highs.
Spectacular session for our markets. This is a resounding momentum seen today. The Nifty gets close to 21,500. The high today is 21,492. So 8 points shy of that magic number of 21,500. But we're going to go home with a 300-point gain on the Nifty, which is over and above the 250-point rally that we had yesterday.
Now this sounds confusing, isn't it? We are going to explain everything in detail and are going to decode why this is happening.
If you look at the health and the work culture of the IT employees right now, you will find that they are not going to gyms, okay? A lot of people, out of 100%, you will only find 10% of the people who are taking good care of their health, okay? A lot of people are having some of the other issues, right? Sugar, BP, then you have cardiac arrest, okay? You will find that a lot of employees in IT are facing some of the other issue. Now you might be thinking why I should go and buy a term life insurance or a health insurance from policybazaar.com. So let me tell you the reasons why. Okay, the first reason is that Policybazaar is India's leading digital insurance marketplace. They have a 30-minute claim support service. 30-minute, guys. You can get an online discount of up to 10%, okay, on different policies. And they have more than 51 plus insurance providers, which include Tata AIA, HDFC Life, Max Life, ICICI Prudential, Bajaj Allianz, Kotak Life, and many more. And they have sold more than 26.4 million policies till now, guys. And they're having a customer and consumer base of 58.9 million registered. Okay, so I think these are the enough reasons why you should go and you can check out the policybazaar.com. Okay, I will give the link in the description box. You can go on the link, you can hit the link, okay, and you will be coming to this page wherein you just have to enter your gender, your name, your date of birth, your mobile number, and you have to click on view free quotes. And then you will be coming to this page, which is term life insurance. Okay, so here you can find there are multiple options. Their representatives will guide you for everything. So I think this is the best option, whether you are looking for a term life insurance or you are looking for a health insurance. Policybazaar.com is the best solution for all of you guys.
Now just do one activity. Go to any bank's website and check their interest rates on the FDs and RDs. You will find that most of the private and PSU banks will be paying around 7.5 to 8% interest on this fixed deposits and the recurring deposits. What I mean to say is that the interest rates are high right now, not only in India, but the entire world, including the US. And that is the reason FIIs like Morgan Stanley, Citibank, JP Morgan, Centerview Partners, Bank of America and Goldman Sachs and a lot other more were selling their stakes in the Indian stock market, and that is the reason the Indian stock market was continuously falling. And what were they doing with all this money? They would take all this money and then would invest it into the government securities, the bonds and the FDs in the US. FIIs sell their stake in Indian assets and then convert the rupee to dollar. So the dollar demand increases. Then there is a scarcity of dollars and the supply of rupee increases. But what India imports isn't dollars, and that is the reason it becomes very expensive. So the RBI has to increase the interest rates to manage the inflation here in India as well. So by this definition, India's stock market should be going down. Instead, it is going up and up. The answer to this question is in this next video.
My colleagues and I remain squarely focused on our dual mandate to promote maximum employment and stable prices for the American people. Inflation has eased from its highs, and this has come without a significant increase in unemployment. That's very good news. But inflation is still too high. Ongoing progress in bringing it down is not assured, and the path forward is uncertain.
So, from the previous clip, you might have understood that the Fed is trying to lower down the interest rates. So here in this picture, you can see that in 2007, 2008 and 2009, which was the year of recession in the world, the interest rate was 5.5%. Similarly, you can see that the graph was going up in the year 2021 and it is going up till 5.5% right now. And recently, Fed has declared that they are going to cut the rates for the 2024 financial year. So that is the reason the forecast is telling that in September and in December, the Feds are planning to cut down the interest rate. And that is the reason there was a huge surge in the FII investing in India in the last 1 week. And that is again one of the biggest reasons why the Indian stock market is touching new highs. I hope that you might have understood a lot of things in this video. If you feel that this video was informative and you got to learn a lot, then please subscribe to our YouTube channel. If you have any more doubts, please ask in the comment section. If you want us to make videos on any particular topic, do add that in the comment section. We will happily answer all your questions and we will create a video on that topic as well. Please share this video with all of your friends. That will mean a lot to us. Thank you so much and have a good day.